Good morning. This is Horizon's Middle East and Africa, our top stories this morning. Exit plan. Asian stocks rebounding after their worst month in more than 17 years as President Trump signals the U.S. will end its war with Iran within 2 to 3 weeks. But the U.S. president lashes out at allies, telling countries to, quote, go get your own oil, with the UAE now reportedly lobbying for a military coalition to reopen the Strait of Hormuz by force. And Israel says it will take control of large areas of southern Lebanon as part of its campaign against Hezbollah. We are live in Jerusalem with the latest. Well, it has just gone 8 a.m. across the Emirates. I'm Jumana Bersachi in Dubai. A lot of green on the screen. Yesterday, quite the close for Wall Street. Very robust end to the day for some of the key major indices, with the S&P up almost 3% by the end of the session, up 2.9%. NASDAQ also up 3.8%. So mega rebound. And actually something that I was reading about on the terminal is that it was actually quite staggering in terms of breadth. Everything seemed to rally yesterday, with some positivity being expressed about a potential wind down to this war. And overnight, also hearing more from President Trump, and he has also indicated that perhaps this war could go on for another 2 to 3 weeks before they start to think about winding down military operations. So that has given a massive boost to overnight equities. Asian equities up 4.2%. The MSCI Asia Pacific, quite the handover there. We'll talk about that in just a moment. S&P futures up 0.2%. And then you can see Brent, which has been the main release valve for people's interpretation of what's going on in the region, trading around $105 here. So still above triple-digit territory. It's still positive on the day, up 1.3%, and perhaps because President Trump seems to be making a delinkage between ending the war and reopening the strait, leaving that up to perhaps other people in the world, other nations to pick up on. So we'll talk about oil as well, developments there. And then gold also up 0.2% this morning, down 12% though, I should say, for the month of March. Its worst month since the GFC. So with everything that's gone on, gold actually has not been a beneficiary. Let's switch over. Another interesting phenomenon that has occurred is the first couple of weeks of this war, and of course this has been going on for a month now, what you saw was a strong correlation between oil prices and treasury yields. So the higher oil prices went, the higher treasury yields also moved as well. This has changed in the last couple of days. Why? Because now investors are beginning to price in a growth shock. So the longer this war goes on for, the higher inflation we're going to see, but ultimately this is going to lead to a curtailing of energy demand, and it's going to have a growth impact, and that is what U.S. Treasuries have started to account for now. So U.S. Treasuries are actually trending lower the last couple of sessions. I just wanted to put that out there. Okay, let's also talk about this stellar handover we're having in Asia today. Winnie Su is standing by for us in our Hong Kong studio. Winnie, take it away.
Yeah, morning, Jumana. As you mentioned, it is quite a nice relief rally that we're seeing in Asian stocks, with MSCI Asia here up more than 4%, rebounding after that worst month since 2008. And it really is that optimism that we might be getting close to the end of the Iran war. And today you can see that leading gains are, for example, South Korea's Kospi index here up more than 7%, led by gains in chip makers, Samsung, SK Hynix, both up double digit actually. And when it comes to Japan's Nikkei 225, similarly also up 4.5%. And that's also coming after some better than expected numbers from the Tankan survey showing that very solid business sentiment over there as well. But overall, stocks are really in the green. However, worth pointing out that the trading volume for these major benchmarks in Asia actually still below 3-month average. So it goes to show how investors really actually lacking conviction in this, especially ahead of Trump's speech, as well as knowing that his 2 to 3 weeks timeline doesn't necessarily mean that he will stick by it. So still lots of uncertainty there to watch for these volatility. Back to you, Jumana.
Winnie, thank you so much. It is true. It is headline after headline, so much whiplash for these markets. All right, let's go back to the main geopolitical news. President Trump says he expects the U.S. to end the war on Iran within 2 to 3 weeks. That's as a report in the Wall Street Journal says the UAE is preparing to help the U.S. open the Strait of Hormuz by force. The White House says the U.S. president is set to address the nation later Wednesday to provide an important update on Iran.
I had one goal. They will have no nuclear weapon. And that goal has been attained. They will not have nuclear weapons. But we're finishing the job. And I think within maybe 2 weeks, maybe a couple of days longer to do the job. But we want to knock out every single thing they have. Now, it's possible that we'll make a deal before that.
Joining us now is Stuart Livingstone-Wallace, Bloomberg's executive editor for Middle East, North Africa, and Russia. Also with us is politics editor Laura Davison. Laura, I'm going to start with you. Talk us through this new 2 to 3 week time frame that President Trump has said or suggested overnight.
Yeah, so this is the most specific timeline we've gotten from him yet about when he wants to end the war. He also detailed a little bit about kind of what his goals and objectives are. This has been one of the constant themes is that his reasoning for the war and what he's looking for this has constantly been shifting. But what he laid out specifically is that he feels that the U.S. has reached their military objectives there, that Iran won't be able to obtain a nuclear weapon, while also saying that there has been regime change. Although this is different from what he was saying or defining regime change as earlier. He was, in the initial hours of the war, he was calling on the Iranian people to rise up and overthrow their government. Now we have essentially sort of the same, different people in those top jobs, but essentially the same government still controlling the country, though Trump says that it is substantially different, at least enough for him. What is going to be unresolved in this, it looks like, is the Strait of Hormuz, and what control and power and whether ships are flowing is not going to be part of this resolution. He says he wants allies to deal with that, and that's not the U.S.'s problem.
Yeah, so a couple of things I want to pick up on there. Stuart, let me just put this to you. One of the things that President Trump said yesterday is that he could end the war even in the absence of a deal with Iran. How would that actually work? And what would bring Iran to the negotiating table?
So, it's an extremely good question. I suppose on the most simple level, he can just walk away. Without a deal of any sort. And that's entirely conceivable. Obviously, the U.S. has this sort of long-term presence here. But, ultimately, I suppose it is true that he doesn't need a formal deal in order to walk away, and he can say he's met his objectives. So what would that look like? We would presume that it effectively leaves Iran in control one way or another of Hormuz. We know what the impact of that control has had on global, not just energy, but all sorts of commodity markets and by extension global economies. And so it would leave certainly one of the big issues thrown up by this war entirely unresolved. And it's very hard to see what the possible permutations are for resolving that if the US decides that it no longer wants to be involved in trying to reopen the strait.
Yeah, and Stuart, we've been monitoring a lot of the comments coming through from various officials around the Gulf. UAE officials have likened Iran's control over the strait to economic terrorism. There's a Wall Street Journal report overnight suggesting that UAE is considering perhaps getting involved in the forced reopening of the strait. What do we understand are the options here for the eventual reopening of the strait if it's no longer one of the objectives that the U.S. administration has set out?
In effect, the options here really are to try either go back to what it was before, which was a maritime trade corridor governed under international maritime law, and that is primarily without one nation having total control and without tolls, importantly. But we know simultaneously that Iran is drafting a bill that would give it, certain rights over there, and certainly the right to extract tolls on shipping going through. That is deeply problematic for pretty much every country, or the Arab Gulf countries on the other side of the Gulf, who rely on that in order to export most of their energy, certainly metals, fertilizers, chemicals, and a whole host of other goods going out, as well as many, many goods going in. And that, by extension, impacts pretty much every other country in the world.
Yeah. Laura, let me round up with you. On Friday, we were reporting that the first Marine Expeditionary Unit had arrived to the region. Overnight, I'm also seeing Bloomberg reporting suggesting that a third aircraft carrier is also on the way to the region as well. So what do we know about this additional deployment and what the U.S.'s intentions are?
So we've seen sort of successive waves of U.S. troops continuing to head to the region. About 3,500 arrived over the weekend, and then several thousand more on the way, including on this most recent aircraft carrier that's been dispatched that direction. This suggests that the U.S. is not 100% convinced that this conflict will end in the next 2 to 3 weeks. It takes multiple weeks and millions of dollars to move these assets around. And so what we've really seen throughout this entire process, but really increasingly so in the past 10 days or roughly, is that the U.S. is continuing to keep all military options open. There have continued to be discussions within the Pentagon about what some sort of ground invasion would look like, whether that would be some sort of operation in the Strait of Hormuz, on Karg Island, or looking at the uranium and nuclear site. So there continues to be sort of this dual narrative happening, one with sort of either, it was peace talks, and then in the past 12 hours or so shifted to just ending the war versus a more expansive military campaign.
Yeah, dual narrative. That's one way to put it. Stuart Livingstone-Wallace, Bloomberg's executive editor for Middle East, North Africa, and Russia, and Laura Davison, Bloomberg's Washington Deputy Bureau Chief. Thank you both so much. Let's go back to markets now. Asian stocks have bounced back from their worst month in more than 17 years. Driven by optimism, the conflict in the Middle East may be nearing a conclusion. Joining us now is Parisha Saimbi, EM, Asia FXLM Strategist at BNP Paribas. Well, what a difference a day makes. Quite the handover from Asian Pacific and indices this morning. Worst month in years, and now you're seeing this is a spectacular comeback with these equity markets up more than 4% today. I mean, is it fair as a trader then that you need to perhaps start positioning for the possibility of quite an abrupt end to this war?
I mean, certainly the news flow sounds a little bit more positive, and the natural instinct then is for investors to perhaps jump back into these risk-on type trades. But we do think that it may be a little bit premature. Certainly, we have the Easter holidays coming up, and there could be thin liquidity. We have payrolls as well later this week. And we still have that other impending deadline that Trump had mentioned before around the 6th of April. So there are still some lingering risks and concerns, and especially if the conflict will last another couple of weeks longer, we think it may be a little bit too premature to jump back into those risk-on structures just yet. I think the other thing is we need to also consider what the medium-term implications are.
Yeah. So let me just pick up on that point as well, because President Trump seems to be delinking between ending the war and the opening prospects of the Straits. And I just wonder how Asian economies, what the outlook is over the next couple of months, assuming that there is still some friction around the Straits. The lion's share of products, 80 to 90%, are headed towards these Asian economies. Is it perhaps too soon to price in a complete normalization? Because it's going to take some while for things to go back to completely normal, assuming there is still some friction and disruption around the Straits.
Yes, exactly that. So, if we think about Asia, they have countries like India, Thailand, South Korea. They sourced about over 40% of their energy needs from the Middle East. So they are quite vulnerable with the Strait of Hormuz being effectively closed at this point in time. And many of the countries also are holding quite low oil reserves. When we've had a look at the data, it could last maybe between 1 or even 2 months for many of these economies like India, Thailand, Vietnam, and the Philippines. So Asia is particularly vulnerable. And even if the Strait, let's say, does get opened up, it could still take some time for that oil to flow, for the production facilities to get up and running, especially given the damage that's been caused to the ports and the infrastructure there as well. It will take a month for it to sail from the Strait out to reach Asian shores. So certainly, I think there will be some lasting impact, and we don't anticipate then that oil prices will be heading back to their pre-conflict levels. I think certainly the markets will need to still price in some geopolitical risk premium as well. So maybe closer to the $80 per barrel mark seems more likely if we truly are getting de-escalation and the Strait beginning to open up.
I've been keeping a close eye on dollar-yen as a currency pair, and not just specific to yen, but I wonder whether we are going to see more types of interventions in the coming weeks if we continue to see this depreciation of Asian currencies.
Yeah, absolutely. The intervention risks across the region are quite elevated, whether it's dollar yen, dollar Korea, dollar Indo, dollar India. We're certainly reaching a number of these key psychological levels. And, having a weaker currency would only exacerbate the inflation risks associated with this conflict. So we do think authorities are mindful of it. And so there is a possibility that we could see intervention. But because of this risk, we prefer to not express our views against the dollar. We prefer RV structures within Asia. So we like to be short Thai baht, long Korean won, long the Malaysian ringgit, and long Sing against the basket of currencies, the near index. So we prefer to look at these RV structures rather than trading it against the dollar because there are still a lot of these two-way risks.
Yeah, okay. Another economic bloc sounding the alarm is Europe. And, Christine Lagarde yesterday, apparently, we reported about this on a G7 video call, actually repudiated some of the U.S.'s claims that once the war is over, everything's going to go back to normal. She seems to think that it is going to have a lasting impact on the European economy. What does that do to the euro currency?
Yeah, absolutely. Europe is another large energy importer. And so to the extent that oil prices are staying elevated, that will have some degree of lasting impact. We estimate that in a scenario where oil prices are, let's say, around $80 on a more permanent basis, so for the course of a year, it could knock off about 0.5 percentage point to developed market nations' growth and add about 0.5 percentage point to inflation as well. Now, that's a scenario we think some of the central banks may be able to look through. But if we are settling at higher energy prices, let's say closer to the $100 per barrel mark, then some of these central banks may need to respond with rate hikes. So, we could see as many as 3 rate hikes from the ECB if we are in that type of scenario where inflation expectations are beginning to de-anchor and heading higher from here.
Parisha, always good to have you on. Thank you so much. Parisha Saimbi, EM Asia FXLM Strategist at BNP Paribas. Well, coming up, more on how Iran's chokehold on the Strait of Hormuz is upending energy supplies as President Trump tells allies they can get their own oil. This is Bloomberg. Welcome back to Horizons Middle East and Africa. I'm Jumana Bersachi in Dubai. Oil has edged higher as traders weigh President Trump's prediction that the U.S. will exit the Iran war within 2 or 3 weeks. Joining us now is Wayland Soon, Bloomberg's oil and shipping reporter in Singapore. Well, the price action in oil is pretty telling today. We're still actually positive on the session despite the fact that equities are soaring. Let me ask you, because you speak to many of the ship owners and shippers that would be typically transiting through the Strait. And I just wonder how they would view an outcome in which the U.S. ends the war in Iran, but hasn't solved the issue of the Straits.
Exactly, Jumana. So I think we've been talking to quite a lot of ship owners and also traders that try to get their cargoes out from the Strait. And the general sense is that during a hot conflict, it's really difficult to sail through the Gulf and the Strait of Hormuz safe, right? So firstly, a broad end to hostilities would be the best case scenario. But even then, it would take a few weeks or even months for the ship owners to regain their confidence to go through the Strait again. So we're just only at the really beginning of what could happen in the next few weeks or months. And that's why you see that reflected in oil prices today, because that might still signal a shut-in of certain production for the weeks to come.
Wayland, is anyone saying that an outcome in which Iran are able to extract a fee or institute a toll is something that is feasible over the more medium term, just economically rather than politically?
if we're talking about oil tankers, let's take a very large crude carrier that can carry about 2 million barrels of crude, and that's normally the kinds of sizes that we're looking at for oil tankers that go into the Gulf. So that works out to be about $1 a barrel, so that's still not a big impact on that. But if you were to think about where this money is going to, people are concerned that if ships start paying that toll fee, that ends up going to Tehran, and really strengthens their bargaining power, right? And the longer that this goes on, the more it's a tacit agreement of what is supposedly an open water that supposedly all ships should have free passage. So it becomes a strange scenario where economically it doesn't hurt that much, but the idea of it, the ethics of it, that's very debatable for ship owners.
Wayland, thank you so much. Wayland Soon, Bloomberg's oil and shipping reporter in Singapore. Well, still ahead, President Cyril Ramaphosa courts investors as the Iran war jolts South Africa's outlook. We'll bring you the details later on the show. This is Bloomberg. Welcome back to Horizons Middle East and Africa. I'm Jumana Bersachi in Dubai. Nike shares slipped despite beating sales expectations due to concerns the war in Iran could worsen weakness in the region that includes Europe and the Middle East. The sportswear giant posted fiscal third quarter revenue of $11.3 billion, above estimates but flat year over year. Sales for both the Converse brand and EMEA region missed estimates. OpenAI has closed its largest funding round to date as the company pushes to acquire more chips, data centers, and talent. It raised $122 billion from investors, valuing OpenAI at $852 billion. The bulk of the funding came from three large tech companies: Amazon, NVIDIA, and SoftBank. A Washington federal judge has given President Trump 14 days to gain congressional approval to build a new ballroom at the White House or stop construction. The judge ruled the president likely exceeded his legal authority by overseeing construction of the 90,000 square foot space, which could cost as much as $400 million in privately raised funds. And a look at equity markets. Things are soaring this morning. Very strong handover from Asia Pacific. And into the U.S. session, we have more moderate open, looking like it's going to be for futures in the U.S. up 0.2%. Take a look at European markets, though, 1.8% playing catch up with Wall Street closes yesterday. Now, coming up, President Trump says the U.S. would exit the Iran war within 2 to 3 weeks. We'll discuss what this means for policy and politics at home. Good morning. This is Horizons Middle East and Africa. Our top stories this morning. Exit plan. Asian stocks rebounding after their worst month in more than 17 years as President Trump signals the U.S. will end its war with Iran within 2 to 3 weeks. But the U.S. president lashes out at allies, telling countries to, quote, go get your own oil, with the UAE now reportedly lobbying for a military coalition to reopen the Strait of Hormuz by force. And Israel says it will take control of large areas of southern Lebanon as part of its campaign against Hezbollah. We are live in Jerusalem with the latest. It's just gone 8:30 a.m. across the Emirates. I'm Jumana Bersachi in Dubai. Quite the close for Wall Street yesterday, pricing in an end to the war at some point, and President Trump building on those remarks overnight, suggesting that the time frame for the U.S. winding up its military operations is 2 to 3 weeks. We have yet, of course, as always, to hear from the Iranian side. But the U.S. seemed to paint a positive picture in terms of how well these military operations are going, but then also leaving open the question of the fate of the Strait of Hormuz. So a few things still up in the air that we need to think about. But the handover from Asia Pacific quite positive, up 4.3%. S&P futures up 0.2%, and this after a very strong close yesterday. S&P up almost 3% in trading, up 2.9%. Nasdaq almost up 4%. So a massive rebound on the final day of trading of March. Of course, we're entering into a new month now. Take a look at Brent. We're still trading at around $105 this morning, up 1.4%. And perhaps because there is not clarity still about the fate of the Strait of Hormuz and how exactly that's going to be reopened, and whether it's going to be a diplomatic solution or ultimately a military solution, still weighing here on the energy market. And then gold trading sideways today, but we are marked at around just shy of $4,700. And I will say that it recorded its worst month in March since the GFC, which is surprising. Typically, in times of geopolitical uncertainty, you would expect gold to do quite well. That was not the case as investors started to price out interest rate cuts from the Fed, price in a more inflationary backdrop. Typically, that would be supportive of gold, but also reports of some emerging market central banks selling down their gold reserves to help support local currencies. So all of that really weighing on gold for the month of March. And switching over, one other interesting development as well. I spoke about the inflationary impact the energy shock is having on the world, and typically as well, that would lift U.S. yields. What has happened in the last couple of days is investors have switched. The correlation has started to drift lower, i.e. yields has started to fall because investors are now pricing in a growth shock, perhaps surpassing that of the inflation shock, and that is being accounted for in some of these U.S. Treasury markets. All right, let's get a further deep dive on what has been happening in Asia overnight. Winnie Su is in our Hong Kong studio. Winnie.
Yeah, morning, Jumana. We are seeing this very nice relief rally across Asian markets, from stocks to bonds to currencies. And here for the MSCI Asia, as you just mentioned, up more than 4%. And that's our biggest intraday gain since about a year ago. Leading gains today, you've got Kospi here up more than 7%. Japan's Nikkei 225 also up more than 4%. So overall, lots of optimism. But also worth pointing out that for these benchmarks, we are seeing, in fact, trading volumes below 3-month average, and that's showing you how investors actually lack conviction when it comes to chasing this rally and the sustainability of this rally, given still lots of uncertainty ahead. Now you kind of flip the board and take a look at what sector specifically driving the rally today. And tech sector here, you can see Samsung Electronics, SK Hynix, both up double digit. And that's coming after, yes, that risk on mood overall. But also we've got the strong data showing that memory chip prices increasing in March. And also with that, some positive headlines from NVIDIA and also OpenAI. Back to you, Jumana.
Winnie, thank you so much. Winnie Su in Hong Kong. Well, many questions remain over President Trump's latest timeline of 2 to 3 weeks before the U.S. leaves Iran. It comes as rising energy prices and economic uncertainty are beginning to weigh on voters and the political outlook at home. Joining us now to unpack all of this is Patrick Schoettmer, Associate Professor of Political Science at Seattle University. Really good to have you with us, Patrick. I just wonder whether it's coincidental that President Trump laid out that 2 to 3 week time frame on the day that U.S. retail gasoline prices shot above $4 a gallon.
I'm fairly confident it's not incidental. A party's fate tends to link closely to how gas prices and other key economic indicators tend to move. And since we are moving into the heart of an election year, I think that those kind of prices are definitely getting the Republican Party jittery.
How are voters thinking about this war? Do they look at it through a national security lens or through a cost of living lens? What resonates more back home?
Definitely with Americans, it resonates more as a cost of living issue. The war itself, I don't think, is particularly present in most Americans' lives, but the economic impacts of it, particularly the rising gas prices and the upticks in inflation that we're seeing here in the U.S., are definitely having an impact.
How would you say are Republicans broadly feeling about this war? I mean, there's, a good subsection of the so-called MAGA core unit that have been against U.S. expansionist policy, but at the same time, many hawkish members of Trump's own cabinet pushing for even more forceful action. How is this all splitting or resonating amongst the Republican Party itself?
While the conflict has been fairly unpopular overall, we have seen a pretty significant rally around the flag effect among Republicans. Republican support, depending on the poll you look at, hovers at around 80%, which is lower than the Democratic opposition rate, which is above 90%. But it's still it's fairly strong for a sort of policy intervention that Republicans traditionally, at least since the Trump era, have expressed opposition to. That said, there are a number of framing issues, and particularly the fact that this conflict is connected with Israel certainly helps to boost support for it among Republicans, particularly among evangelical Republicans.
And are you seeing a generational divide? Is it that older demographics are tending to be more supportive of this war versus younger demographics within the Republican Party?
I don't think it's as much a generational divide. I think it's more an ideological and religious divide within the Republican Party. In general, though, like I said, Republicans are supporting this. The fractures that we are seeing are among the more nativist or more anti-Israel wings of the Republican Party. We've seen people associated with the podcaster Tucker Carlson, who represents a particularly nationalist and isolationist wing of the Republican Party, break off and begin to express opposition. And we do see some of the more elements hostile to Israel or even approaching anti-Semitic, like Joe Kent, who recently resigned from the administration, who are also mounting increasing criticism of the American intervention.
You know, what scope is there for public opinion to shift further? I mean, you just mentioned 90% opposition among Democrats, about 80% support amongst Republicans. How are those numbers likely to shift the longer the war goes on for?
Well, before conflict started out, we saw a poll coming out of the University of Maryland that showed only about 21% of Americans supported a conflict. Once the conflict began, support for the war shot up to about 41%. But we've already begun to see fairly significant erosion in that support level, where currently it's hovering around 36% on average across polls. So the fall off on it has been fairly rapid. And I think if it were to continue, and particularly if we were to see ground troops put in, it could plummet considerably further. One point of comparison might be George W. Bush. He ended up around at 27% by the end of the Iraq War.
So what does this all mean for the midterms? That's the big question. And I wonder whether at this point the Senate is actually up for grabs for Democrats. What is the data suggesting?
Right now, the data is suggesting, given the trends that we're seeing in polling, and particularly the questions asking what party would you like to see in control of Congress, that the Senate races are moving from a more of a Republican-leaning outcome to a true toss-up. Now, it's a long time till November, and there are a lot of things that could happen. But this intervention in Iran has put some more wind behind the sails of the Democrats. And we've seen that play out in anecdotal evidence. We saw that becoming an important theme in the recent No Kings protests over the past weekend. And we've seen it in the upticks in candidates who were not necessarily polling that strongly. People like Mary Peltola in Alaska, who's looking to knock off a Republican seat.
And, you know, it's very tough to get insight into President Trump's mind or what he's thinking. But given this is his second term, do you think as the U.S. president, he's more focused on a legacy-defining war and one that is perceived to have, you know, gone well for the U.S. as opposed to, you know, achieving a big victory at the midterms?
Well, I think he's got both in mind. I do think legacy is something that he's thinking about a little bit more. with the intervention into Venezuela and now this intervention here and the hawkish sounds we hear coming from the White House about Cuba, I do think that the president sees a possibility of putting sort of an expansionistic stamp on his presidency, something that he would see as a fairly strong legacy. But he has also repeatedly expressed concern that if the Democrats take over the House and the Senate, that he'll be able to block his further initiatives, prevent him from further reshaping the court, and as he's most frequently expressed, likely would be facing another impeachment.
Patrick, we're going to leave it there. Thank you so much. We need to have you come back on again. Patrick Schoettmer, Associate Professor of Political Science at Seattle University. Well, coming up, Israel says it will occupy parts of Lebanon and keep out 600,000 residents. We have the details next. This is Bloomberg. Welcome back to Horizons Middle East and Africa. I'm Jumana Versace in Dubai. Israel says it will take control of large parts of southern Lebanon and prevent more than 600,000 residents from returning to their homes as part of its campaign against Hezbollah. Defense Minister Israel Katz says the army will establish a security zone, that's what he's calling it, inside Lebanon, and all homes in villages along the border will be destroyed until the safety of residents in the north of Israel is assured. Let's go to Jerusalem now and speak to Bloomberg's Dan Williams. Dan, I feel as though the language that's been coming out of various Israeli officials the last couple of days has most definitely hardened, and they seem to be implying that the scope of the what they call a security zone, what Lebanese would describe as an occupation zone, seems to be expanding and shifting even more north. So walk us through the latest.
Jumana, I think you're right. You may also be experiencing some historical deja vu. It's been over a quarter century since Israel ended its previous occupation of southern Lebanon back in the year 2000. You recall that was seen by many as an opportunity for Israel and Lebanon to establish finally peaceful relations, neighborly relations. That didn't happen. What happened was that Hezbollah, the cat's paw of Iran in the region, built up its military capabilities, including in southern Lebanon, with fighters and rockets, sometimes within touching distance of Israelis. Keep in mind that the proximity there between houses is very remarkable, certainly by Western standards. There are areas of the border where Lebanese and Israelis can literally peer each into the other's rear yards, backyards or front yards, depending which way their houses are facing. What's happened now is Israel, in the wake of the October 7th attacks in the year 2023, which set off an ongoing regional war, now with a crescendo in Iran, have changed tack completely. They're no longer willing to tolerate threats on any of their borders. We've seen that in Gaza, we've seen it in Syria, and now we're seeing it in southern Lebanon, where, as you noted, not only have they sent in troops to fight Hezbollah, since Hezbollah joined in this war on the side of Iran, its main backer, on the 1st of March. They're sending in troops trying to push Hezbollah north to prevent rockets reaching deep into Israel. It's simply a matter of reducing the range of Hezbollah's remaining rockets if the rocketeers have to fire them from further inland in Lebanon. They're also saying they want to prevent a resumption of the mass evacuations of northern Israeli communities that we saw in 2023, 2024 under Hezbollah fire. Now they're saying Israeli civilians will stay put. Lebanese civilians will be displaced. Somewhere in the order of 1 million have been displaced. And given long-standing allegations that especially the Shia villages, they've been providing cover in some cases for Hezbollah, as you noted, there's something of a scorched earth tactic being employed against those frontline villages.
And Dan, irrespective, it seems, of what happens with the Iran war, even if President Trump decides to wind things down there in the next 2 to 3 weeks, it still seems very likely that the Lebanon front is going to persist for some while. Do we have any indication of timeline out of Israeli officials to how long they foresee keeping and maintaining hold of this territory in southern Lebanon? Because, you spoke about the displacement of up to 1 million people. It no longer seems to be a temporary displacement, but rather a more permanent one, which could have significant humanitarian impacts as well.
Absolutely, and it's significantly added to internal pressure, economic pressure, political pressure on that beleaguered, Western-tilted government in Beirut. The Israelis are definitely saying they see this while linked to the Iran war. After all, Hezbollah is an Iranian ally, as a more protracted campaign, a campaign that should be divorced from the Iran war. I would imagine they're not going to admit this, but should the Iran war end without Israel's objectives or aspirations vis-a-vis Iran being met, they will double down on trying to achieve something material and long-lasting in Lebanon. So yes, that will last. It could be months, but history tells us it could be years as well.
Bloomberg's Dan Williams in Jerusalem. Thank you for the latest there. Well, coming up, South African President Cyril Ramaphosa courts investors as the Iran war jolts the country's economic outlook. We'll bring you the details next. This is Bloomberg. Welcome back to Horizons Middle East and Africa. I'm Joanna Bersacci in Dubai. The fallout from the Middle East conflict is reshaping global trade routes, with disruptions forcing companies to rethink how goods move around the world. South Africa's Deputy Minister of Trade, Industry and Competition, Alexandra Abrahams, told Bloomberg that the country could be well positioned to benefit from rerouted shipping flows.
Well, I think the Middle East conflict has affected not just South Africa, it's affected the entire globe. And we see that with, trade routes. But, South Africa is strategically positioned. We sit on the tip of Africa, and that possesses an opportunity for trade routes to come past, Cape of Good Hope, past South Africa, and explore that as a new channel, as opposed to the channels that are now currently closed as the conflict, due to the conflict. We also are an entryway into the whole of the African continent. We have the African Free Trade Continental Area, which speaks to tariff duties, zero tariff duties, and all of that. So while the conflict obviously has implications when it comes to cost of fuel, which would increase many things, cost of living, food, and that is a crisis that we will have to navigate. And government is at the forefront in negotiating with the multiple of stakeholders on how we mitigate some of those effects.
Have we already seen some of those windfalls that you alluded to, Cape of Good Hope, some ships being rerouted? Are you seeing that already, evidence of that?
So no, I'm not seeing that just yet. But Minister Barbara Creecy is currently on stage, and she was highlighting some of the logistical trade routes that have been opening up, but also focus on our freight rail routes that are opening up, connecting the ports with further inland provinces, and also inviting private companies to take up investment opportunities when it comes to opening up our rail networks, opening up what we now have, the Durban Container Corridor. And that Durban Container Corridor runs from Gauteng to the Richards Bay. And that is a project that is also currently in the pipeline with the Department of Transport.
South Africa's Deputy Trade Minister, that was Alexandra Abrahams, speaking with Bloomberg's Jennifer Zabazaja. Meanwhile, South Africa is moving to cushion the economic impact of the Iran war, cutting fuel taxes as oil prices surge and pressure builds on households and inflation. Deputy Finance Minister David Musando told us they're better positioned than other emerging markets to absorb the shock, helped by strong commodity exports and improved fiscal buffers.
So in our case, we've been running budget surpluses, so we're better prepared insofar as the external shocks are concerned. And yes, we are a net importer of oil. However, we are also the largest exporter of gold, largest exporter of platinum, and these commodities are doing well. So this will offset the negative impact of this shock that we are seeing that is coming out of the war in Iran.
Our chief Africa correspondent Jennifer Zabazaja joins us from Johannesburg and has conducted those interviews at the forum. Really interesting to hear the perspectives from some of these officials you spoke to, Jen. They don't seem to be overly concerned about the impact of the war. Talk us through how it's resonating back home.
Exactly, Jumana, and that was really consistent with what we heard throughout the day. It was really this optimistic tone that we heard throughout a number of speeches from South African officials, including the two deputy ministers you pointed to there. And of course, the President Cyril Ramaphosa, who started this investment conference just a few years ago and pointed to some of what he saw as continued reform and progress for reasons why South Africa is what he calls a credible investment destination, despite some of those global headwinds. And you can take a look at some of the points that he was making for that reason. You know, he talks about some of the issues around the economy during apartheid, also, of course, COVID, during state capture under the former president, Jacob Zuma, and how the economy has weathered most of those shocks. And even Deputy Finance Minister David Masondo there pointing to how we did see sovereign risk premiums declining before this war started. So potentially that should give investors confidence. And you could see why they're saying that. The president has this very ambitious target for investments of 3 trillion rand, about $177 billion over the next 5 years. But still, there are quite a lot of headwinds. On the same day, there was also a fuel tax that was cut that could cost revenue. So quite a lot for the government that they're dealing with. But still, they're trying to strike an optimistic tone.
Jen, thank you so much. Jennifer Zabazaja, our chief Africa correspondent in Johannesburg. Well, it is a positive day for markets. Let's pick up the conversation with Daybreak Europe. This is Bloomberg.